Hi everyone, please click on the subscribe and the like button below and support our channel. So we were looking at gold a lot recently. We've had some fantastic movements within the gold sector, and we're also seeing a bit of movement in the oil and gas sector as well. So today we're going to look at oil and gas again. We looked at oil and gas about a month ago, and since then there's been a few changes and the oil and gas prices have just been shooting up and up and up. So looking at this chart here, back on the 30th of September, we looked at the oil price, and back on the 30th of September, this is what the oil price was. It was around $74, and the forecast was for the oil price to decline gradually into the future. However, since then, now we're at the 23rd of October, the time of making this video, and what we've seen happen. So the oil price was hitting this line of resistance here, and we had one hit of resistance, two, a third, and then we finally broke through about a week ago, and since then the oil price has become more and more bullish. People are a lot more optimistic about oil, and as you can see here, now the analysts are predicting that the oil price will increase into the future, whereas previously the oil price forecast was to decline into the future. And if we look at gas, it's the same story. Here we have the gas price back on the 30th of September. It's actually come down a little bit. Analysts were saying it's going to decrease into the future. However, now, a month later, now analysts are predicting an increase in the gas price into the future. So what's going on? Well, basically there's a few things. Biden has basically said that there's going to be no respite from these increased prices until 2022. So until after the winter has finished in the States, the prices are not predicted to come down at all. And the other thing that Biden said, which was interesting, he basically said, we're not going to get any support from the fracking industry in the States, because if you remember correctly, Biden is very pro ESG, whereas Trump was very pro oil and gas. And Biden, basically, his policies are not there and designed to support the fracking industry in the States. So the frackers in the States are not interested in ramping up production just to get through this crisis, when the laws and all the policies that are in place right now are not really positive for fracking and oil in general. Okay, so what's going on? This is why the gas prices and the oil prices are so high. There's been very little exploration during COVID. No one could move around. The ESG, so with this been this huge move to renewables. However, we need that baseload power that things like uranium, coal and gas and oil provide, and the ESGs are not cutting it right now. They're not producing the power that was expected of them. Next thing, Biden is not really a big oil and gas fan. He, compared to Trump, he's really not into fracking, and he's not supported the industry as well. So now they're having a shortfall in terms of the oil and gas they need for your daily use in the States. Russia, so Nord Stream 2, that's ready to go. Nord Stream 2 is the second pipeline going from Russia to Germany. It's ready to go. It just hasn't been approved by the European Council and the European governments. So basically, Europe is struggling right now because they're not getting the gas they need to heat the homes that they really require at the moment. Countries are reopening. There's a lot more demand for gas and oil than there used to be. Planes are flying. However, supply is not coming up as great as the demand is. Inflation pressure. So you have a lot of inflation pressure right now. There's a lot of money printing going on. Sectors like gold, sectors like energy do very well in inflationary periods. And that's what we're seeing occur right now. OPEC. So OPEC's maxed out. People talk about OPEC and how they're restricting supply, but can they really produce much more oil and gas? Don't know about that. They're really maxed out in terms of supply right now. However, demand is increasing. And the other thing you see, you've got a lot of oil and gas majors like BP, like Royal Dutch Shell. They're moving out of gas, and a lot of the reason is because their shareholders want them to, but also some of their governments where they're actually operating are actually forcing them to do that through legislation. So you're seeing a lot of change in those areas too. That's benefiting the mid-cap oil and gas producers. So that's made the perfect storm in terms of shooting up in oil price and gas prices currently. So this is what we're seeing right now. So since the flash crash, which happened at the end of April last year, the oil price has steadily shot up. If you had got involved in oil stocks back then, you've gone from $20 to $85 currently at the time of filming. Not a bad return. So what we did in the video a month ago, we looked at 6 different oil and gas stocks from around the world. We tried to get a balanced view, and this is what's happened. So since that flash crash occurred here, the oil price has slowly been shooting up, but the oil and gas industry has been quite unloved. So a lot of investors have moved on from oil and gas stocks, and they're looking at the ESG area of the stock market, and a lot of these oil companies have been struggling a bit in terms of their stock prices. So since May last year, May last year, the oil price has increased 165%, but the best of these 6 particular companies we looked at has only increased 59%, and the worst is about 26%, which is Beach Energy here. So these companies represent really good value compared to this actual oil price that's currently there. Okay, so here are those 6 companies in a bit more detail. So if we look at these 6 companies, the PE ratios are a little bit high for us. We don't like PEs over 20. Ideally, we like a PE under 10. So if I look at all of these stocks, Beach Energy is the best right now for us. But if you look at them all, Royal Dutch Shell, since we produced the video a month ago, it's up 8%. Exxon up 5%. Petrobras, that's down a little bit. That's the only one that actually is. Chevron's up 8.4%, Beach Energy 4.8%, and Woodside Petroleum's up 8.49%. So a lot of these companies have moved a little bit with the oil price, but it's a big disconnect between the oil price and the share price of these companies. And if we look at all of these companies in general, we still like Beach Energy. One of the reasons being, other than the fantastic PE ratio, other than the fantastic debt to equity ratio, we like this a lot. We like to see and we like to purchase companies that are closer, their share price is closer to their 1-year low than their 1-year high. If you look at Royal Dutch Shell, it's really close to its 1-year high, its all-time high, and it's the same here for Exxon, the same for Chevron, but companies like Beach Energy, they're a lot closer to their 1-year low than their 1-year high, and we like that a lot. And the reason for that is Beach Energy just released its quarterly report, and its production was down around 16%. The share price responded accordingly. It didn't go up much at all. However, the main thing for Beach Energy, the problem they have is their Western Flank prospect is declining. The oil reserves there are declining a great deal, and that's making the share price struggle a great deal, as you'd expect. However, they're doing a lot of drilling, so you might find suddenly in the next month or two that Beach Energy hit the mother lode of a reservoir, and suddenly their oil supplies, their oil reserves are a lot higher. But secondly, why we like Beach a lot more than that is because basically they have got a really huge gas reserve in Waitsia, and Waitsia has a huge amount of gas. And Beach Energy is one of the few companies in Australia that has secured the rights to export its actual gas reserves. Not many countries can do that because Australia wants to keep its gas for the domestic market. However, if you can export your gas, you get a lot better price in Europe than you do in Australia, like a lot better price. And the good thing that's going for Beach Energy is they've just teamed up with BP, and BP has the gas refining facilities in Australia, so they're going to refine Beach's gas, and they've done a deal recently and they're going to ship it overseas. However, the big thing is they're not starting those exports until 2023 in October, so around 2 years from now. So it's not a great time right now for this company, but if they do hit oil and gas reservoirs, if they hit new supplies, then they're going to be fantastic in terms of their share price increase. And in 2 years, that deal with BP is worth about $7 billion. So it's a bit of a no-brainer in a way to get involved in Beach Energy right now. And certainly with all the inflationary pressure, all the money printing going on right now, it's very difficult to find a place to put your money. And the oil and gas price is going to depend solely on all those points we brought up earlier. What's going to happen in the near future is a bit uncertain, but sectors like gold, like precious metals, and sectors like energy, oil and gas are certainly going to be a good place to avoid inflation and to foresee a great return in the future. And the trick is to find the companies that are setting themselves up for that future, and we feel that Beach Energy is one of those companies.